Metals are still on the rise, and I actually just took a position in silver. I've been talking about this idea for some time, but now I officially pulled the trigger on today's pullback, went ahead and picked up a long position here. Right around this 38.2% retracement, we saw a big response to this area here, ended up taking my position, and I've got a stop loss below here. I shared this trade inside of our VIP Discord. If that's something that you're interested in joining or would like some more information about, you can find out in the description down below all of the membership perks. And if you have any questions, you can speak to our team using the first link in the description down below. They'll help you out happily. So I like silver and I also like gold, but gold has made a little bit too far of a push without me, and I actually am getting a better signal, believe it or not, for silver right now over gold. Silver is getting a +8 on the Edge Finder with commitment of traders data showing institutional money still very preferential to silver. Let me actually show you that. We can pull up if we go to our sentiment, take a look at COT data. If we pull up COT data, what we can see is that silver continues to be a very large net long position for institutional money. And if we actually hover over that, you can see long to short ratio would put us around 72% long. So clearly institutional money prefers the long side of silver. Additionally, we can see in the latest reported buys and sells from the commitment of traders data that there was an increase in long contracts that heavily outweighed the slight increase in short contracts as well. And if we pull up the COT data history tab, you can actually see there's been this rising interest overall, and bullishness continues to stay very present in the silver commitment of traders historical chart. Meanwhile, gold is hitting a fresh all-time high. We hit 2942, which is absolutely crazy. And with this ginormous push to the upside, I'm very curious to see if this can just keep going. I mean, clearly for the last several days, people have said, oh, gold's got to pull back, and yet again and again, we see gold pressing higher. It's almost like we're accelerating to the upside. And for me here, there is no calling this top, right? When it comes to metals, I believe that we have a really strong breakout on our hands here. And if we do get a pullback, I'd probably be a buyer at around this 38.2% to 50% level on the price of gold. That would put us squarely, by the way, at a retest of the all-time high previously found around 2,800 to 2,775. The dollar index is also holding up pretty well here recently. Although we are seeing a little bit of sell pressure come into this chart recently, we are still seeing this thing kind of hold steady, chop it around while still holding the support around 107.5. And indices continue to remain really flat and just back and forth here. You can see the S&P 500 is still near its all-time high, but just kind of stubbornly holding resistance around this 6,100 level. And what we can see here is that we've actually been in the same spot for several months now, going back to December 4th. We have not moved. So I think that there just, for me, is just better opportunities out there. Like I said, I like the silver idea. Maybe that works out, maybe it doesn't, but I like areas of the market like that more so than just kind of trading the indices right now, which are very choppy. Same thing for the NASDAQ and for the Dow Jones. You can see we've got this resistance overhead. I'd be more interested if we do get a breakout on things like the Dow Jones and the Russell and the S&P and all those. But I just don't really love where they're trading right now. It just continues to sort of be stagnant and really not making any kind of substantial move. Bitcoin is down 1% today. This is another chart that people have been asking me about, and it just looks so range bound. This is really hard for me to be decisive or directional on something like this. I would either need a breakout through the highs, or if you're a long-term believer, maybe there's some buy the dip stuff that could go on around 92,000. But for me personally, as a trader, I'm just going to wait for the Edge Finder to give me some sort of confirmation on Bitcoin before I trade it again. Tomorrow we have the consumer price index numbers coming out, and that is going to be really important for markets. If we do continue to see inflation rising, that could be very problematic for risk assets, which are kind of fingers crossed waiting for rate cuts this year. And if we continue to see inflation rise in an economy that is doing pretty strong overall, that presents some problems for that story and for that narrative. Perhaps we do see, if inflation continues to rise, some drama on the stock market side, perhaps some downside slides and moves lower and things that are a little bit more rate sensitive. However, if you do get a cooling print in inflation, it's probably going to be welcomed by the stock market as well as metals, which like I said, am currently long through my silver position. And remember, rising inflation, generally speaking, stronger for the dollar as it presents the Fed with the scenario where they have to keep interest rates high to combat that inflation. And if we see inflation cool, that's a little bit weaker for the dollar because it gives the Fed the opportunity to potentially cut rates sooner. Most currencies against the dollar remain in a downtrend, however. You can see here's Euro USD, which I would be probably a seller if we do see some spikes higher. Same thing with the pound. And the dollar yen, I'm a little bit more mixed. I actually like the Japanese yen to the long side as they look to hike rates while most other central banks are looking to cut. I do also have a position long on dollar CAD, just willing to dollar cost average. If we do see a bigger slide to the downside, I like this overall for a net gain, especially if you do see some tariff concerns flare up. Dollar CAD would probably shoot higher, as I do think that tariffs between the two nations would disproportionately favor the US and hurt Canada more. That being said, the tariff stuff is still very day by day. We don't know everything that's happening, and there is that 30-day countdown between Canada and the US, as well as the US and Mexico, determining what's going to happen next in the negotiations. Here's a look at yields, which are slightly higher today, but again, will likely move pretty aggressively on that CPI print tomorrow. So keep a close eye on yields. That is likely what's going to guide the next move in the markets. Again, if inflation concerns flare up, this thing is probably going to potentially break this little downtrend that we've been seeing and head higher. But if we do confidently get some cooling inflation, perhaps finally we've seen a top on this and we may see lower, possibly like this long-term kind of head and shoulders on yields, which will be very welcomed for metals and for equities most likely. Just depends how everything is looking. In fact, we've got a tool for this. When we pull up the US economic heat map, and actually maybe we can zoom in here on this part of the screen here. Check this out. So I just added this. This might be worth pausing the video if it's helpful to you, but this kind of shows you a general heat map of how this page works. If you're seeing mostly blue, like everything is pretty much blue, that's just straight up a boom. In this environment, things like commodities do quite well, and etc. If we talk about Goldilocks, where inflation is cooling and growth is really going well, that's where stocks just rip. And if we talk about risk off, stagflation type environments where inflation is rising and the growth overall is cooling, this is possibly on the table. That would be kind of scary. That would be very strong for metals as a safe haven. And what that would also mean is probably stocks get sold off pretty heavily. And then finally, if we take a look at this last environment, this would be rough, right? Where we see growth falling and inflation. This would be bond centric. And of course, also gold would probably hold up decently in that environment as well. So if we take a look at the overall US economic heat map right now, again, tomorrow we get a lot of data for CPI, both month over month core and year over year. So we'll keep an eye on this. We're sitting at 2.9% on the previous report. Is that going higher? Is that going lower? Is it staying flat? That will of course populate here. And if we continue to see this heat map change colors, we've got to be adaptive. And this is why fundamentals are so important. If you don't already have access to the Edge Finder, you can get a trial down below in the description. If that's something that you're interested in, use the link down there to apply for one, and you can get a 30-day trial to the tool. Today, we had a special guest on the live stream who's actually a long-term viewer of the show who decided to hop on camera and join me. His name is Alan, and we had a great conversation. He had specifically a really good question about the dollar index and gold both rising at the same time. Check this out.
So tell me this, like the dollar is kind of flat, right? As well as the indices, they're chopping around. And I don't trade this, but I remember in your 2025 predictions for gold, you said 2,800 or 3,000, somewhere around that area. And we are there. Why is that? Like, what's the point? Like, why is there that much uncertainty right now in certain aspects of the markets?
That's actually a great question, because I think a lot of people are probably wondering the same thing. They say like, look, we got dollar index. That does not look like a weak chart. I mean, it doesn't look like it's as strong as it was over here, but it doesn't look like a weak chart. Let's cross that. Take a look at gold, which just straight up also looks like a very strong chart. It's very understandable. Why the heck do we have a whole bunch of uptrend on both? And I think what it comes down to, Alan, is like, okay, so if we're thinking dollar index, well, remember that the dollar index is like, let's look at all the currencies against the dollar. All the other currencies look even weaker because, you know, you had the Bank of England, for example, you referenced that earlier, super dovish, looking to cut rates for the most part. Then you have the Bank of Canada, then you have the ECB. They're all looking to cut rates. Meanwhile, the US, the Fed, is kind of in this position of like, we might get one rate cut this year, but it's very different, right? So the Fed is very hawkish. So I think if you took a look at all currencies, most currencies are looking to cut rates. So that really favors gold. You also just mentioned there's geopolitical uncertainty. There's the Trump tariffs that people are worried about, uncertain about. So there's a driver to gold on the geopolitical front, and globally, most currencies and their central banks are looking to actually cut rates, including the Fed. So you have like a trend towards rate cuts, which is bullish for gold, but then you also have dollar outperformance. So this is why it can be a little confusing, but the dollar and gold can move in the same direction sometimes. And it always makes everyone a little bit confused, but that'd be my best answer to that. Do you trade gold at all, Alan?
I don't, but you know what? I'm forward testing gold and also like the indices as well, because my approach is pretty transferable. It's kind of similar to yours, honestly. It's pretty transferable to those assets if you're more of a swing trader. Right now, I'm just more of learning like the characteristics of each one. Like gold is very volatile, it moves really fast, right?
Yep.
The S&P is kind of like it'll respect levels more. So the S&P to me is more like the euro. So I'm just kind of learning those, but after all these moves and forward testing, I could see myself definitely trading these assets.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.